asset categories help businesses organize and manage their fixed assets more effectively. Asset categories allow businesses to group similar types of assets, track their value, and manage depreciation more efficiently. This is crucial for maintaining accurate financial records, ensuring compliance with accounting standards, and making better asset management decisions. Key features of asset categories. 1. Asset grouping. Businesses can classify their fixed assets into different categories, such as machinery, vehicles, furniture, or IT equipment. This helps organize assets based on their type or purpose. 2. Customizable categories. Sage allows users to create custom asset categories to fit the specific needs of their business, ensuring flexibility in how assets are managed. 3. Depreciation tracking. Asset categories can be linked to predefined depreciation methods, e.g., straight line or reducing balance, to automate the calculation of depreciation for assets within each category. 4. Simplified reporting. Categorizing assets simplifies reporting, enabling businesses to generate detailed reports on asset value, depreciation, and disposal based on specific categories. 5. Tax and compliance. Proper categorization ensures that assets are recorded accurately for tax purposes and in compliance with accounting standards, making it easier to manage tax deductions related to asset depreciation. Benefits of using asset categories. 1. Organized asset management. Grouping assets into categories helps businesses maintain an organized system for tracking and managing their fixed assets, ensuring that information is easily accessible. 2. Accurate depreciation calculation. By assigning depreciation methods to each asset category, businesses can automate depreciation calculations and ensure accuracy in financial reporting. 3. Improved reporting and insights. Asset categories provide businesses with a clearer view of their assets' value, helping them track depreciation, plan for replacements, and make more informed financial decisions. 4. Compliance and audit readiness. Properly categorized assets make it easier to comply with tax regulations and accounting standards, ensuring that businesses are prepared for audits or tax filings. How to set up asset categories in Sage Business Cloud Accounting. 1. Navigate to fixed assets. In Sage, go to the Fixed Assets section and look for the option to manage asset categories. 2. Create new asset categories. Define the name and description of the category, e.g., office equipment, machinery, vehicles. Choose a depreciation method that will apply to assets within this category, such as the straight line or reducing balance method. Set the useful life of assets in each category, which will determine the rate at which they depreciate. 3. Assign assets to categories. When adding or updating assets in the system, assign each asset to the appropriate category. This ensures the asset follows the correct depreciation method and is grouped properly for reporting purposes. Example uses of asset categories. 1. IT equipment category. A business may group all computers, servers, and networking equipment under an IT equipment category. This helps track depreciation of all technology-related assets and simplifies reporting for IT-related purchases. 2. Vehicle category. Businesses with company vehicles, e.g., cars, trucks, can create a vehicles category. This allows for specific depreciation tracking of vehicles and simplifies tax reporting for auto-related expenses. 3. Machinery and equipment. For manufacturing businesses, machinery and equipment used in production can be placed in their own category. This helps track the value and depreciation of essential equipment and aids in planning for future replacements or upgrades. 4. Leasehold improvements. Any improvements made to leased property, e.g., office renovations, can be categorized as leasehold improvements and depreciated over the term of the lease or another applicable time period. Reporting with asset categories. 1. Depreciation reports by asset category. Sage allows businesses to generate reports that show the depreciation for assets based on their category, making it easier to track the total depreciation expense and net book value for each group of assets. 2. Asset value reports. Businesses can run reports that show the current value of assets within each category, helping them monitor their financial position and plan for future asset replacements or investments. 3. Asset disposal reports. When disposing of assets, businesses can generate reports that show which assets were disposed of within each category, ensuring that assets are removed from the books properly and any gains or losses from disposal are accounted for. 4. Tax reporting. By grouping assets into categories, Sage makes it easier to calculate tax deductions related to asset depreciation and ensure compliance with tax regulations. Benefits of reporting with asset categories. Improved financial insights. By generating reports based on asset categories, businesses can better understand the financial health of their fixed assets and how they contribute to overall business performance. Depreciation tracking. With asset categories, businesses can ensure they are accurately tracking depreciation, preventing over or underestimating the value of their assets on financial statements. Asset replacement planning. Reports by asset category help businesses anticipate when certain assets may need to be replaced based on their useful life and current value. Best practices for managing asset categories. 1. Regularly review asset categories. Periodically review your asset categories to ensure they are still relevant and accurate, especially if your business expands or purchases new types of assets. 2. Assign the correct depreciation method. Ensure that each asset category is assigned the correct depreciation method to accurately reflect the asset's expected useful life and wear and tear. 3. Link categories with maintenance schedules. For assets that require regular maintenance, such as machinery or vehicles, use asset categories to help organize and track maintenance schedules, ensuring your assets remain in good working condition. 4. Keep asset records updated. Make sure that newly acquired assets are promptly categorized and that disposed or fully depreciated assets are removed from active records. Integration with other features. 1. Purchase orders and invoices. When businesses purchase fixed assets, the items can be assigned to specific asset categories. This ensures that new assets are properly categorized and set up for depreciation from the start. 2. Expense tracking. Asset categories can be linked with expense accounts, allowing businesses to track costs related to each type of asset, such as maintenance or repairs. 3. Tax compliance. Asset categories are essential for tax reporting, as they allow businesses to track depreciation deductions for different asset types and ensure compliance with tax regulations. Conclusion. In Sage Business Cloud Accounting, asset categories provide an efficient way for businesses to organize, manage, and track their fixed assets. By grouping similar types of assets, businesses can automate depreciation calculations, generate detailed reports, and ensure compliance with accounting standards. The use of asset categories also simplifies financial reporting and improves asset management, helping businesses make informed decisions about asset investments, replacements, and maintenance.